So what's going on? It's your boy Drew back with another video. This is our last video for the month of March. A quick count update, not even a count update, is our the final update of the March account for this month. So we started at $10,000 for this month, right? We got our account to $16,000. We won 55% of our trades, $6,000 profit. Obviously, we have $16,000 in the account. This last week that we traded, we got into two trades. We won one, we lost one. This is our fifth trade for the month. So we won five trades, we lost four trades. As you can see, we broken down all these trades throughout the month. What I'm going to do is I'm going to break down these last two trades for the month, show you exactly how I got into them, show why we won this trade, why we lost this trade. This trade was actually a win too. It literally hit the stop loss by a pip and then completely shot down. We're gonna go over it, you're gonna break it down. But as you can see, we're obviously at the end of the month. As you can see, we haven't won every single trade, right? We haven't won every single trade, but we've won a good amount of trades, and we still came out on top. Okay, now obviously with me, I've grown my account by $6,000. Okay, depending on what account you're playing with, how much you're risking is going to depend on what you're making for your account. Okay, now my goal is once I get this account to $20,000, I'm going to be risking a little bit more money, right? Instead of me risking $1,000 to make $2,000, I'm going to be risking $2,000 to make $4,000, right? So obviously, if I have my $20,000 account, this would be a $12,000 profit. So that's, as you can see, this is kind of the name of the game of what we're going to be doing on a week in and week out basis, a month in and month out basis, right? Continuously growing our account, right? Continuously, trading our system, managing our risk properly, and just continuously doing the same thing. Obviously, this is a probability game, right? As we continuously keep growing, right, continuously keep doing what we're doing, right? We're going to have more money in our account. We're going to have more money to play with. And inevitably, that's going to mean that we're going to be making more profits. So, right now, like I said, it's the end of the March account got it to 16,000. Next month, we're going to try, we're going to get it to over 20,000. Then we're going to be able to risk a little bit more. So, let's go over these trades that we traded for this week. As you can see, these are the stats for the month and whatnot. So we got into EURJPY, and then we also got into EURNZD. So let's go over this EURNZD first. This was the first trade that we had gotten to on, what was it, Tuesday, 325, whatever that was, Tuesday or Wednesday, whatever. This is where market was currently at. As you can see, we were projecting this to come all the way to the downside. Market was currently over here. When we play it out, or when we see the after picture, it's crazy. Literally barely tapped the stop loss, barely tapped our stop loss, just come all the way down to here to take profit. So let's go over this trade. Remember, as long as the analysis is correct, I can live with trades like that, right? I can live with trades, barely hitting the stop loss, hitting the take profit, because we understand that, like I said, it's a probability game, right? Even though that happened one time, doesn't mean it's going to happen again. Okay, as long as we keep trading our system and letting the probabilities play out, we're always going to come out on top. So let's go over this trade. So it was EURJPY. That was, what was that? Sent that out on 325. 325. I think 25. So around, let me get the exact. At, I'm trying to get through it. 1:30 a.m. 325 hour. So we got into this trade at 1:35 a.m. That is when I sent this out. So around. I'm sorry, this is not EURNZD. I was like, why does this picture look like EURNZD? I was like, why is it? I was like, what was I looking at? EURNZD is what we're trading, not Euro JPY. Let me go to EURNZD. I was mad confused. I was like, This does not look like the same thing. All right, so let's go to that EURNZD 325. Where's that at? 325. So I think it was this move right here. Um, 325. Yeah, so it was this move down here. Uh, 30 or something like that. Okay, so 130, 320 around right here. Yeah, so that's where boom, stop loss got taken out, and then it made that big push to the downside. So let's go over all this. So this is what I was looking at real time. So boom, you're on ZD. This is the trade we're looking at real time. So obviously, when I was first going into this, when I first looked at this, first thing I noticed is that we were on an upward trend. So we can clearly see that Euro NZD was on that upward trend right here. Boom, market is making its higher highs, higher lows, higher highs. Okay, we see that market was getting ready to make that next higher high, but we see that market broke the structure. So remember, right? Understand how the way the market is moving and flowing. When market wants to continuously go to a certain direction, continue trending. Once market wants to break structure and go to the downside, we're going to see that break. We're going to see that break of structure. Market's going to break that low, trace up, and continue coming to the downside. Okay. So when we look at this, remember, what I'm really paying attention to is our 4 hour candlesticks. If I start seeing a break of structure within the 4 hour candlestick, then that's my indication, that's my confirmation that, hey, this is getting ready to, shift trend. So when I'm looking at this and I see that market was on its upward trend and I see that market failed to make a new high by breaking this 4 hour candle structure, this is my indication that, hey, this is now getting ready to come to the downside. Now we're expecting market to make this similar swing all the way to the downside. Okay. Right. This is exactly what I'm looking. What I'm looking at. This is how I was marking this up when I sent this out. This is how I was looking at. This was my first indication as to why I even marked this up. Okay. So now that we see that, hey, we have a potential opportunity for this to come down and sell. Okay, because we would have all this room to play with. Now we have to get that understanding of what this looks like from that overall perspective. So we go to that monthly time frame. Right? Go to the monthly time frame, and now we mark this up, and now we see exactly what the higher picture is telling us, so that way when we go to our lower time frames, we know exactly what we're looking for. We can see that market was on its upward trend, right? Market's making its higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We see market make that next push up. Okay, so understand how the way the market's moving and flowing. Once we see that market made that similar to equal swing, that is an indication that market is getting ready to shift, right? So once market makes that similar to equal move that it did before, as you can see, that's what it did right now. We are now expecting this to start giving us some type of confirmation for this to start coming down, right? Because even though the overall move is going up, we understand that, hey, whatever goes up must come down. This move is not going to keep coming up forever. From a monthly perspective, this is going to start retracing at some point. Now, how do we know? Smaller time frames are going to tell us because within every trend, there is a trend. So now we're expecting market to do something like this from a monthly perspective. Okay, so obviously, if market's going to do that from that monthly perspective, right, if market's going to do that from that monthly perspective, remember that's going to be a downward trend within the weekly. So right now, we know that this upward movement from that monthly perspective is an upward trend from the weekly. If we go to that weekly time frame, we can see that trend that it's making. Okay, see that market made its higher highs, higher lows, higher highs, higher lows, higher highs. Okay, now we see that market's making that push down. We see that market made that next push up, right? So now what we're expecting, so understand how the way the market's moving flow. Let's draw this out, right? Once market's going to the upside, once market wants to start retracing and come to the downside, we're going to see market fail to make a new high, right? Fail to make a new high, and then start taking out lows. Okay. So this is how we're training the market. This is how we've trained our mind to look at the market. So understanding our knowledge with the market, understanding that market has made that similar to equal swing. I am expecting I'm expecting market to start making this move, within this time frame. So like right here, right? This weekly move or that monthly move up, right, is that weekly trend. So what I'm expecting from a weekly perspective is I'm expecting this to stop on a dime at some point, right? I want market to stop on a dime and start coming to the downside from that daily. Now, how do we know when this is going to happen? When the daily time frame tells us that, because within every single trend, there's a trend. Within the trend on the monthly, there is a trend on the weekly. Okay, so this monthly move up is an upward trend within the weekly. This weekly move up is an upward trend within the daily. So what I'm expecting from a daily perspective, I'm expecting from that daily perspective for market to come up. And while market's right here, I want to start seeing that daily low get taken out. That's what I'm expecting. Now, obviously, this move can continuously keep going up, okay? But understanding where we're at within this market right now, okay? Understanding where we're at with this market, we're not even looking to try and buy this because we don't know how much higher it's going to go to. Once market makes a similar to equal swing, that is it, right? We don't know how much higher it's going to go to because we understanding how the way the market usually moves and flows. Once market makes a similar swing, that is an indication that it's getting ready to start to retrace. So we're waiting for that indication, waiting for that confirmation for market to drop. Okay. So now when I'm looking at this, I see that obviously market's making that push up. So let's go to the daily. Let's see what the daily time frame is telling us. So now we can see the daily trend. And remember, if you can't see the accurate trends going on here, just go in the past. What is making these moves? It's moves. Okay. Like I could start like right here. Like market made this push up. I made this next move down. Market made that next push up. Market made that next move down. Market made that next push up. Market came down. Market came all the way up. Okay. You see market made that next push down. So right now, right, when we actually look at this from the daily perspective, we can see that, hey, this hasn't even started retracing yet from the weekly, right? How do we know when this wants to start retracing from the weekly? Once we see this daily structure get taken out. So now look what's happening. We can see market make that push up. See market made that push up from the daily, and look what's happened. We're starting to see market take out these candlesticks. So now we know that we're getting that confirmation that market is getting ready now to retrace from that weekly perspective, which is now going to be a downward trend within the daily. Now, like I said, we're already expecting this to happen because of where we're at within the market, right? We're expecting this to start coming down. Once market makes that similar to equal swing from that monthly perspective, we are not expecting this to continuously going up. We're expecting this to start giving us a confirmation as to why this is going to drop, right? So now let's draw this out, right? Understand within every trend, there is a trend. So within the trend on the weekly, we can see this trend on the daily, which is what it's making right now. Now, within the trend on the daily, there is a trend on the 4-hour time frame, which is what we are trading. Okay, so remember, like I said, all we're doing on these higher time frames is we're getting an accurate description of exactly what market wants to do right now. Okay, we're getting an accurate description of what the market wants to do right now, and when we go to our 4-hour time frame, we know exactly what we're looking for off the time frame that we trade off of. Now we understand, hey, does this move want to does this move want to come down for the day, or does it want to go up for the day? Right now, we're getting a lot of confirmation as to why, hey, this is actually getting ready to continuously come down. Look what happened. We see that market took out that low, so we understand if market took out this low, that is an indication that market is getting ready to make a new low. Now, with our knowledge of how the market moves and flows, the market likes to move and flow in similar to equal swings when it wants to keep going a certain direction. So if market just made this move to the downside, retrace up and respect this trend, we know that market is going to at least make something similar to equal to this last move that it did before. So we theoretically have all this room to play with. We know that from a daily perspective, EURNZD is going to be coming down all the way, until this up until this range. Now, this whole move down is going to be a trend within the 4-hour, which is, like I said, the time frame that we are trading off of. So now when we're looking at this, right, when we're looking at this, we can see the trend that's going on within the 4-hour. Remember, if you can't see what's going on here, just go in the past. This move was already made, so just follow it, right? We see market made that push to the downside. We see market retraced up. We We see market made that next push down, market made the next push up, market came down, market came up, right? Now we're starting to see market go to the upside. Obviously, market retracing from that daily is an upward trend within the 4 hour. All right, market came down, market took out its high. We see market came down. We see market starting to take out, market starting to go back up to go to the upside. But look what happened. Now we're seeing that break of structure. So boom, now that I see this, this is the confirmation. Remember when we looked at this from the start? We're like, hey, I'm seeing this break of structure. It looks like it's going to the downside. Now, when we looked at this all the way from the top, we can see that what we were looking at from that 4 hour perspective is the actual description, the actual picture of what market wants to do, right? This sell that we're looking at is an accurate sell for us to potentially come to the downside. So now I'm looking for my opportunity to get into trade. We already have our opportunity because we see that that 4 hour low got taken out. So let me just draw this out. Uh, All right, boom. So market makes push to the side. Now we see market take out that low. So now we're expecting market to make this exact same similar swing. Okay. Boom. We have all the data we need, right? Now we just need to find our opportunity to get our 1-to-2 ratio out of this trade. So let's see exactly where market was at when I had sent this. So we were looking at this, or I sent this out at, what time was it at? I sent this out at, this was 1:37 a.m. So at 1:37, this is where market was at. This is what it was looking like. So let's go to that 1:37. Oh, one. So I think, okay, so this candlestick plays out from 1 until 2. So this candlestick opened at 1 and it closed at 2. So at 1:30, I think market was around here. Let's go to exactly where we got in at. So we had got in. All right, so we had got in entry area 1.88680. 1.88680. So boom, right here, basically. Right. So boom, we had got in there. Obviously, our stop loss during this time, right? During this time, our stop loss is above that last 4 hour candlestick. Okay. Above that last 4 hour candlestick. So this is where our stop loss was at. So as you can see, all right, as you can see, we have all this room to play with. So when we were looking at this, right? When we were looking at this, we could see, okay, we have all this to play with. We just need to get our chunk. We just need to get our chunk from this, right? Just 1-to-2 ratio, right? We just need the market to come all the way down to here, and we got what we needed for the day. Now, okay, so this is what we're looking at. So our take profit 1.88296. So it's probably something similar. Take profit 1.88262. Same thing. Stop loss 1.8874. Above that 4 hour candlestick. 86474, same thing. All right, so this is what we're looking at real time. Okay, this is why I sent this out. Now, when we play it out, right, we can see that market was really playing inside our area. Market came all the way up, literally tapped our stop loss, came all the way down and hit take profit just like that. Okay, now, like I said, right, even though the trade didn't work in our favor, right? This is what we're doing every single time. Okay. As long as the analysis is correct, this is not going to happen every single time, as we are going to see on our trade that we got into the next day. This is not going to happen every single time. Okay. As long as our analysis is correct, our sense of direction of where market is going is correct, I can live with trades like this, right? As long as we're winning 40, 50, 60% of our trades, we're going to come out profitable every single time. But yeah, this was the EURNZD trade. Like I said, it was a very, very clean, nice setup. Literally barely hit our stop loss, came all the way down and ended up smacking our take profit, which is fine. Like I said, this is the name of the game of trading. I have to live with it. You have to live with it. Have to live with the win. Have to live with the wins. Have to win with the losses. You just have to keep rinsing and repeating and just keep going. So, yeah, that was that EURNZD trade. Very clean setup, like I said. We had got into on to the next trade. Yeah, on to the next trade, man. Um, and so the day after this was the Euro JPY trade. Okay, so yeah, I was looking at that. I got mixed up. I was looking at Euro JPY when we first opened up the book, but Euro JPY we got gone to this the following day. So this was Thursday, I believe. I forgot. Thursday and Wednesday, whatever the 26th is. Um, yeah, this was Euro JPY. When we looked at this, obviously this is where market was at. We saw that where market's going to the upside. So right now we're on the 1 hour time frame. So we're theoretically looking at this 1 hour trend. We see market came down. We knew this is how low market was going to go to within that 1 hour, expecting this to keep going back to the upside. Like I said, this is where market was currently at when I had sent this. We were risking this to make all this. When we played it out and when market, we played it out and got into the trade and whatnot, we can see market came all the way up, smacked the take profit, got all our money back from what we lost, and we made profit or extra profit from this trade. So theoretically, last trade we lost for me, last trade I lost 1,000. This trade I won 2,000. I net profited $1,000. Okay, so profit of $1,000 for the week from the two trades. So let's break this down. Let's go over this. This was Euro JPY. This was on the 26th. Euro JPY on the 26th. Oh, okay. Yeah, when you rewind it on the other pair, it rewinds it on all the other pairs as well. 20. So we had got into this trade at we had set this at 2:50 a.m. So let's go to two right here. So boom, this is where market was at. So let's see what I was looking at real time when I was looking at this. So Euro JPY. This is the first thing that I was noticing when I looked at Euro JPY. So remember, when I'm going onto the market, the first thing I'm looking for is I'm looking for some type of break of structure, right? I'm seeing what the structure is, and I'm looking for market to retrace. Okay, I'm looking for market to retrace, and then I'm also looking for market to break a 4 hour candle. So what I mean by that is, right, I'm looking for market to break structure, right? For it to break a high, and I want to see it retrace, and I want to see it start getting ready to make its next move. So for this example in particular, you can see that market was on its downward trend. The market took out its high, okay? Take out the high. I want to see it start retracing, and I want to see it getting ready to make that next push up. This is how I'm looking at the market. This is my only indication for me to even think about marking this up from the top all the way to the bottom. Okay, so now I understand the market's going to move in a similar to equal swing. Just did this. I'm looking for market to theoretically make that same movement again. Okay, now remember I need to also see a break structure within the 4 hour candle, so we can see that last candlestick that market had made. We see that market took out that candle, so we're theoretically expecting this continuously do that. So me seeing all this, I'm like, hey, this could potentially be an opportunity for me to trade. Now I need to mark this up in the top, get an accurate description, an accurate understanding of what this is doing. So that way I know that when I go and try and trade this and look at this, I know that what I'm looking at is actually accurate, is actually, going to the upside. Because remember, we could be looking at this from this 4 hour perspective, and we could look at this all the way from the top, from the monthly to the weekly, and all this could be doing is actually, market just retracing or something from a daily perspective, and actually getting ready to come to the downside. This could just be market, like I said, retracing from that daily, right? Retracing up from a 4 hour, right? We could be sitting, like right on our EMAs within within that daily perspective. And actually, this is how high market wants to go to, right? And this is actually getting ready to start making a push to the downside, just like this. This is why we have to have an accurate description, right? We have to have an accurate, a picture of what the overall market is doing, so we know exactly what we're looking for on these smaller time frames. I'm going to keep reiterating that on every single video because it's very, very important. You never want to just rely on one time frame to trade. One time frame can look like one thing, whereas the bigger picture is telling you something completely different. Okay. So always understand and always remember that. So when we look at this from the top, when we look at this from a monthly, right, all I'm doing is I'm just identifying the structure. I'm identifying the trend. So we can see like right here, market was on its downward trend. We see market made that push to the downside. We see market came all the way back up. We see market came down and market failed to make a new low. Okay. So, me looking at this could be market, moving up from a monthly perspective, right? What this could be telling us is this is just that yearly move up, and market is just retracing from the yearly and getting ready to keep going back up from a yearly, which is obviously an upward trend within the monthly. Okay. So obviously there's not a yearly time frame, but based off what this picture is telling me, we understand if market fails to make a new low, that is an indication that market is getting ready to make a new high. So if market came all the way down, failed to make a new low, and we're seeing market completely break the structure, it's telling us that market is getting ready to make a new high, right? So if market's going to get ready to make a new high, that is an upward trend from a weekly perspective. Okay. So we can see that weekly trend, right? Can't see what's going on here, just go in the past. We'll start right here. You see that market paid is pushed up, right? Market came up. You see market came down. Obviously, if market wants to come down from this monthly, that's going to be a downward trend within the weekly. We see market come up, failed to make a new high, completely took out its low. Okay. So now we see that market's making that next push up. We understand where we're at within this market. We see that market's completely taking out that monthly candle. So we're expecting this to completely come up and take out that last weekly high. Okay. That last weekly high is all the way up into here, right? So now if that's going to happen, that means that this move is going to come all the way up and take out that high. Let me draw that. For all you new people that's coming to the channel, I hope this is all making sense. I have we every trade that I've gone into this month, the wins, the losses, it's all broken down on my channel. I have different episodes, episode 1, episode 2, episode 3. Those are just the weeks that I traded. Check those out. I break down all my trades, going exactly everything I'm doing on these these trades is exactly what I'm doing on my other trades, the ones that I've won, the ones that I've lost, and just rinse and repeating. We're doing the same thing on every single trade, right? It's just rinsing and repeating. So if you want more examples, just go to my other videos and check those out. So right now, like I said, we understand where we are within the market. Market failed to make a new low. This is getting ready to make that push to the upside. So now we're expecting this to keep coming up and take out this high. Now, if that's going to happen, obviously this weekly push up is not just going to keep going up forever. It is going to trend up. So that weekly push up is going to be a trend within the daily. Go to that daily time frame. That's exactly what we can see. All right, we can see the trend that's going on right here. Right, market made that push down, next push up, market came down, next push up, market came down, next push up, market came down, next push up, came down. Now we can see the trend that market is making. Okay, boom. We see that market's completely respecting the structure. We're expecting market to continuously keep going to the upside. So let's draw this out. Boom, boom. Right now, we're expecting market to continuously make that push to the upside. Let's erase all this. Expecting market to make that push to the upside. So Given that we're seeing that this is on an upward trend that is getting ready to continue to go to the upside, we know that this daily move up is going to be a trend within the 4 hour. So now, right, we can see that what we were looking at is accurate. Remember when we started on the 4 hour time frame, the first thing we saw was this little upward trend. Now, when we actually look at this from the top, right? When we look at this from the top and we come all the way down to our time frame we trade off of, we can see that, hey, this picture is actually accurate. What we're seeing is going with the flow of the market. So it is safe. It's good to try and buy this, okay, which is what we did. A profit on it. So let me draw this out. Market made that push up, came down, made that next push up, came down, up, came down, up, came down. Okay. So now understanding how the way the market moves and flows, if this move wants to keep going to the upside, we know the market's going to move in a similar to equal swing. So if market made that last move, we know the market's going to make something similar to this, at least this. Okay. Remember, don't use the equal swing, similar move analogy to its most, literal sense, right? We are just using this as a guide to understand where the market's going to go to. We know that when market likes to trend, right? We know that 85% of the time, market's going to make a similar to equal swing, right? It's going to make a similar to equal swing or a greater swing. Moral of the story is we know that market's going to at least make something similar to this, but it doesn't matter because we're not trading this the whole entire thing. All we're doing is we're trying to find our opportunity to get our chunk out of this swing move that's going to make. What is our chunk? Our 1-to-2 ratio trade. Okay. That's all we're looking for. Like, as you can see right here, right? You see that, like, let's say we were trading this. See how market made this move to the downside, retraced up, and then it made the next movement again. We knew that if we were trading this, we knew that market was going to at least make something similar to this. We knew that market was going to make something at least similar to this. Okay. So what did it do? It made that exact same swing, and then it made an even greater swing. Okay. We don't need all this. We just needed to know that it was going to make this, and we needed to find an opportunity to get our chunk out of it. That's all we're doing. Okay. Same thing with that next swing that it made. That next swing, right? If we were looking at this, you see how market made this exact same swing that it did and made an even greater swing. Okay. So that's all we're doing. That's all we're doing with our equal swing analogy. I don't want you to use it to its most, literal sense, like I mentioned. We're just using that analogy to understand where market can potentially go to, so that way we can get what we need and get out. So, to my point, to my example, knowing that we have all this room to play with, I'm finding my opportunity to get a 1-to-2 trade ratio out of this. Right. So let's go to the 1 hour and see exactly where we had got in at. So we got in at. I'd sent this and around 2:50 a.m. Entry area was at 162.134. 162.134. 162.134. Boom. Literally right here. Exactly right there. Okay. So that's where we got in at. Right. Now, where's our stop loss? Remember, our stop loss is always determined based off of what the 4 hour candlestick is, where the 4 hour candlestick is at. Okay. So where market's currently at. So I'll be honest, I don't even think I used this stop loss. I think I used this one just to give more cushion because we don't need this tight of a stop loss. We have all this room to play with. So I think I just gave it just a little bit more cushion, I think. Just looking at that, just knowing myself, I probably 161.940. 161.940. Oh, I didn't, but 940. So I used this candlestick. But honestly, we wouldn't have gone wrong, honestly, going with this last cut because this is really, really tight. Me personally, I don't like trading, trades that are like this tight. I probably was just looking at this and was like, what, this is giving me all the confirmations I need or whatever. But we could have potentially traded this as well. As long as the risk to reward is good, because remember, I don't need to trade this whole entire thing. Me even just looking at that last candlestick, we still have a really, really nice risk to reward. good 1 to 2 ratio trade where I don't need to, hold on to this trade all the way up into here. We still could have took profit up into here per se, but obviously, we didn't trade it like that. We traded it off that 1.161.940. We'll just look at that what we were trading. 161. 161.940. Get it right on. 61. Oh, right there. Same shit. Okay. So get it right on. Boom, right there. Okay. So like I said, we're trading all this to make all this. As you can see. Okay, because remember, like I said, within every trend there's a trend. Now, me primarily, I'm trading out the 4-hour time frame. I'm trading this 4-hour move, but understand that this 4-hour move is also a trend that's going on within the 1 hour. So, we're seeing the 1 hour trend. Like you can see it clearly, like right here. Boom, market's making its push up. Once market wants to trade, we see market take out its low. Market made it's on its downward trend. Once market made that next push up, we see markets on its upward trend. Okay. So right now where we're at, I'm not trading the 1 hour time frame, but like we're trading within the 1 hour trend theoretically, and it lines up perfectly with like the 4-hour candlesticks. We can see that where market's out in the 1 hour, it's hitting right on our EMA, it's hitting right at the lowest point. So, we're expecting this to make that next push up. Like if I drew this out, you can kind of see like the 1 hour trend and what we're looking at. All right, market made that push down. So, we can be we can be looking at this like boom, market is made that 1 hour push up and it's getting ready to make that next similar swing. Okay, you could be looking at it like that as well. Obviously, like I said, what we're really paying attention to is the 4-hour candle, kind of just on this 1 hour, just so we can get like the actual price and time when we got into this trade and whatnot. But yeah, you could be looking at it just like this. We know that market's going to make that similar swing and see how that similar swing lines up exactly with our 1 to 2 ratio and whatnot. So when we play this out, right? When we play this out, right, we can see market was really playing inside this area, right? We see the market started giving us a nice good push. When we see market came all the way up. Wait, what? What is this? 161. 162.531. 253. Oh, I'm tripping. I was so confused. I was like, wait, why is this? So this is where I take profit. I was like, what just happened? This is where I take profit was. Boom. I was like, I was like, he smacked the hell out of this take profit. This is okay. So this is where market was at. So we can see that market came all the way up. All right, market made that push down, and then we see market came all the way up, hit our take profit. Right now, what market's telling us, okay, what market is telling us, and this is what I mean by the small time is going to tell us everything. What market is telling us, it's telling us that this 4-hour move has stopped. Okay, telling us this 4-hour move has stopped, which means that this daily move is not going to continue going to the upside. Now we're seeing market getting ready to make this push to the downside from that daily, which is going to be a downward trend within the 4-hour. Okay. And this is that's a prime example as to what I mean by we're not theoretically trying to stay in the trade all the way until it makes a similar swing because this market can do anything it wants at any time. So once we see what we want, once we see what we need, just get in and get out. You get your 1 to 2, get out. Don't try and hold it for the 1 to 4 or 1 to 5 or not or anything like that. Just get to that 1 to 2, get out, and let the market do what it wants to do. But yeah, this is what we had traded, and yeah, so this was our 1 to 2 ratio. Market came all the way up, smacked our take profit. We got in, got out, and we went about our day. So yeah, those are the two trades that we had got into. As you can see, like I said, this is where we were at during that time. And yeah, so like I said, man, this was our trades for this week. This is our trades for the month. We ended up, like I said, winning 55% of our trades, which is, more than good, right? You know, I think breaking even. I think if you win 30% of your trades, 35, something like that, your break even, and anything over 30 or 35%, you're in profit. So if we're winning 55% of our trades, as you can see, we're in great profit, made $6,000 this month, and we're just gonna keep rinsing and repeating, keep on growing, keep on doing everything we need to do. So hope you guys are, learning a lot. I hope you guys are applying the information that I'm dishing out on all my videos and all my calls. This is the end of our March account, April account. We're getting started tomorrow. So hope you guys, like I said, are continuously growing, continuously flourishing within this skill set. Let's get better this next month. Let's keep growing our accounts. Let's keep getting better. Make sure you like, subscribe, turn on the notifications every single time I'm dropping a video. You guys are, getting a notification so you can watch it and you can learn from it. So, with that being said, I will see you guys all in the next video. Let's get a great start to our April accounts, and let's keep flourishing and keep growing. See you guys all in the next video.